said, the biggest mistakes that I've made have been areas where I've not stuck true to my principles, value investing principles, analysis, like Ben Graham teaches you. I think, look for a long operating history, look for companies that have histories longer than 10, 15 years, before this whole craze with the BRICS era began. Because, the moment this craze began, a lot of stuff came out of the woodwork, poor quality stuff. And investment banks will always be very happy to bring these companies public and dupe a public shareholder if they can make their fees. So I think you look for companies that have been around, before 2000, before 95, during the Asian crisis. So look for companies like that. Again, consistent dividend payout policies. I hate to sound like a broken record, but I think that's very important. Capital allocation by management. Where are they spending their money? I'm going to give you an example of a company that I met in Hong Kong recently. I met in Singapore recently. It's a Hong Kong listed Chinese company. And it's the North Face of China. So it's got a very good brand in the winter sportswear space in China. Good distribution network. Trading for less than 8 times earnings. Good free cash flow yield. 9% dividend yield. No debt, a lot of cash on the balance sheet. I was getting really excited about this stock, and then I started reading more and more about it, and I found in one of the presentations that they'd gone out and bought a building on Oxford Street in London, and they'd spent a huge amount of their cash on the balance sheet to do that. So when I met with them, I asked them, I said, what was the reason you did this? When 95% of your sales are in China, why did you go out and buy something half the world away? A building, you're in the apparel space, why did you go and buy a building? And they were like, we wanted to advertise and we wanted to get our brand out to Europe, so we thought this would be a good way to do it. So that's just an example of poor capital allocation, and that can very easily move to fraud. And now he's allocating capital poorly. 6 months down the road, when he misses his earnings estimates that the investment banks have set for him, what is he going to do? Like fudge the books? So I think that's something that you need to keep in mind in Asia. I think you can never be too careful. Obviously, you have to judge every situation as it comes. I think this was a very glaring example of poor corporate governance and poor capital allocation. Related party transactions, again, you see a lot of self-dealing between the public company and private enterprises held by the management. That's a dead giveaway. So go through the listings, go through public listings for the last 5 years, look for related party transactions. And I think things like that will help you navigate the minefield, if you will. And I think some of my mistakes have been when, again, like I said, I've not done all of the above.